Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Thanks. Good to be here.
All right. So we're talking Shopify. This thing's underperforming so far this year, down nearly 1%. So it hasn't participated in the rally. But, what kind of data are you seeing? Because it seems like, retail sales on the e-commerce side are continuing to grow, but they're still, 1/5 of total retail sales overall?
Yeah, they are. They're right at 20%. You got that number right. And I tell you what, when you look at Shopify, in their last report, it was a pretty good report, but they had some weak guidance, and that caused it to sell off. It went from 91 down to 77 overnight. And what's interesting is, it's bounced around a little bit since then, but now we're at 77. So basically, the market has told us, for the last 3 months, we just want to pause and see what's going on with Shopify in the next report. And so that's what we're about to find out. Web traffic. I think that 2024 has kind of been the year of foot traffic, right? And web traffic is obviously very important. It's growing, but the growth is actually slowing a little bit. And so when you look at web visits for Shopify specifically, it's up about 52% on a year-over-year basis. So people are continuing to use this product, continuing to adopt it. Businesses are reporting really strong conversion rates with them. But just as you pointed out, the adoption of e-commerce it's obviously critical to the future. It's about 1/5 right now, and you can see kind of where it's going, the bars and the blue line where it's going, but that red line shows us the increase on a year-over-year basis and what's expected. So the increase is expected to decrease. So the adoption is slowing, even though it's continuing to increase. So it's a little bit of a deceleration, if you will. But this will continue to be a big part of all companies. You've got to be able to sell online. It's critical. And what's really cool about Shopify is, they empower merchants who are maybe a little bit smaller and don't have the giant footprint, and not everyone has an account with them like Amazon, where you can go to a new merchant and use the Shop Pay feature and check out with basically one click. You don't have to make an account with this new merchant and give them your credit card info and all that. You can just, instead of trusting this new merchant, you just trust Shopify. And so that feature has been very, very successful. Merchants have reported a plus 50% conversion rate when they offer that as a checkout feature, as opposed to just opening an account and dealing with the merchant directly. So a huge ability for merchants to increase their sales. And we saw that last quarter they processed $18 billion worth through that. It's 58% up year over year with 150 million new buyers. So this is a very strong platform that's empowering merchants to do better business and fulfill their orders better for their customers. So it's a win for the business, it's a win for the customer, it's a win for Shopify. So we love where they're going. I mean, they just had a great year in 2023. They cracked $7 billion in revenue for the first time, gross profit of $1 billion. So we love to see the direction of this company. I don't mind the sell-off at all. I think expectations have been lowered a little bit. And long term, we're very bullish on this one. So, I would say this is a buying opportunity ahead of earnings here.
Yeah. Landon, 11% of total e-commerce is Shopify. They're the second largest checkout after Amazon. But here's the problem, Landon. Revenue growth a year ago, 26%. Revenue growth for the coming year, 20%. Decelerating growth and a company with a high valuation, that is not a good combination. And I think that's why this stock seems to have stalled. They need to get to more profitability, and they need to get the growth back. How do they do that? Pre-COVID, they're never going to hit pre-COVID levels that your chart recognizes, but how do they stabilize the growth metrics?
Yeah, I think you got it right. I mean, when you talk about a growth company, it's always multiples of future growth.
Yep.
And if that future growth starts growing slower, then those multiples start getting affected. It's a double whammy. You can kind of get an exponential effect on the downside, just like you can on the upside. So that's the danger of growth stock investing. But you're also talking about a company that is really transforming the way that merchants behave and the way that they do business. So obviously they've got to get the growth continuing in the right direction, but as long as they continue to add and as long as they're continuing to compete with Amazon, they're getting a lot more customers under their belt, both on the merchant and the consumer side. I like their chances going forward, but you're right. I mean, as a growth investor, you want to see that number continuing to tick up and up and up. And I think that, just all comes down to efficiency and how good their product is. So as they get more customers, get more data, they understand what converts better. And if you can offer a merchant the ability to increase conversion rates at plus 50%, of course they're going to take it. But then what you do is, if you can get that merchant that has your product, instead of, you got to make the initial sale, but once you have them on, then if you can continually increase the conversion rate even more, then people are going to start looking for businesses that have this shop pay feature. I think that's when you kind of turn the corner and it becomes the preferred checkout method. Then really good things are going to happen. I mean, it reminds me of when you log into a website and they offer log in with Google or log in with Facebook. It's so much more appealing than going through and typing all your stuff out and adding a password. And, you're supposed to remember a password for 400 sites. No, you just remember your Gmail or your Facebook. And that's kind of where they're going. That's their target. If they can become that of online e-commerce, then all of these growth valuations are undervalued, in my opinion. They just got to get there.
Now, asset-light model for this one, maybe we're seeing that deceleration, as Kevin mentioned, in growth numbers. But now you got to start equating it to maybe competition at this point, Landon, because Apple Pay's out there, PayPal, Square, and their Cash App. I mean, those things have seen decelerating growth also. So that pain point's there where competition comes into space. I know this focuses more on small to medium-sized businesses than the big ones, but is that going to be a problem? And do you have an earnings score on this one?
Yeah, of course, competition's a problem. I mean, this is America, and if you're making margins like this, everybody's going to jump in and attack. What we've seen, though, I mean, aside from Amazon's checkout process, Shopify seems to be the best in the business so far. They got to continue to iterate, continue to improve, and just fend off the competition. This is going to be a win for consumers, certainly. And then, it just depends on what you think about this company. If you think they can hold off against Apple, then it'll be a win for Shopify. Personally, based on the data, I think they can. Our research department's behind this one. We like it. And I will tell you, going into this earnings report, we're plus 46. So, bullish. Not crazy bullish, but pretty bullish on this one. And I like the fact that they're basically trading right at where they were after a disappointing guidance from last quarter. So I think expectations are low. I think the bar is going to be pretty low for this one. So I don't think it'll be difficult for them to beat expectations. All
right, great stuff. Great data. As always, Landon, appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio. Kev, option market price